going on, guys, and welcome. It is Monday night on our 19th week of investing. Here on this channel, we invest $50 every Monday through Friday into dividend-paying stocks with the hopes of early retirement. We're going to take a look at a couple things. First, we'll look at our channel tracker, just kind of see generally how things are going. Then we're going to look at a couple stocks, as always, just see kind of what's going on with the portfolio. And then we're going to look at our total dividend payout. Okay, where are we at? It's nice to do a little status check once in a while. How many dividends are we going to earn per year based off our current holdings? So stay tuned. We're going to go through all this stuff, and let's jump into the channel tracker. All right, guys, so we're going to follow this blue line right here. Today is May 8th of 2023. My current weight is 283.6. So keto is going well. We're doing pretty well. We're actually sticking to it very well. So yeah, we're down a total of 15.1 pounds on the year, which is great. My investment balance, hold up a minute. Sheesh. No, we are not at $55,000 yet. We're at $5,454.80. So still a pretty good gain there. Our dividends earned, we're at $48.78, and our total growth is now above $200. We're at $204.47. Total YouTube income, we're at $100. That's still from a couple people signing up for Sofi. If you guys are interested in an easy place to set up your investing, there is a link down in the description. You get free stuff if you start up a new account and fund it with at least $10. Plus I do too. It helps support the channel. Total subscribers in the channel, guys, we started this on January 1st, and we're at 1,762 subscribers. No new subscribers so far this week. However, we didn't lose any, so I guess that's good. Our total view count, 189,752, and our total watch hours of 3,732.3. Again, this whole thing is to hold myself accountable, but also to be candid and watch as something grows. It looks like our viewership is coming down a little bit, and that's okay. I'm still doing these to, hold myself accountable and invest in a public way. So, but now that we've gone over that, let's jump into Seeking Alpha so we can take a better look at this portfolio. All right, so here we are in Seeking Alpha, and I have all of our holdings organized by value from top down. So leading the charge, we have Realty Income Corporation. That's at $887.41 of value. That's 14.14 shares. Now, their forward dividend yield is at 4.86, so it did dip down below 5%. However, we are getting paid out monthly, and this is a pretty solid contributor. SCHD is right behind it, and I shouldn't say right behind it anymore. SCHD's come down a tad. But we're at $859.59 of value there. That's 12.17 shares. And as I said, this price has come down quite a chunk. Jumping over here to the year-to-date performance, we are at 6.02% decline on SCHD so far this year. But this dividend yield is looking pretty good. The forward dividend is now at 3.36. That's because of the price drop. Now, the next one we are not buying regularly. Okay, so Realty Income Corporation and SCHD, we put $10 every Monday through Friday into each one of these. JetQ, we entirely have bought this based off of options trading premiums. Okay, so when we make money in options trading, we dump that into JetQ, and that's how we've built our position. And we are building this position rather quickly. So we are at $790.11. That's 17.32 shares. The price is up to $45.63. And the dividend yield is still set at 12.78. So, the price of JetQ is growing. The dividend yield is still high. It's a monthly dividend payer. We're almost a year old, or we are a year old. So, great stuff there. Year-to-date performance through the roof. Love it. Pepsi. So of Pepsi and below, we are putting $5 every Monday through Friday into these holdings, and Pepsi is leading the charge. So we have $490.63 of Pepsi. That's 2.54 shares. Now, this dividend is getting lower and lower, or at least it was, right? So Pepsi announced a 10% increase to their dividend like 3 months ago. Now it's finally showing up on all the stuff. So, Pepsi and Procter & Gamble right beneath had always been neck and neck with their dividend yield. But Pepsi came out with a huge announcement hiking their dividend, which is awesome to see. So we're back to 2.6% for dividend yield. All right. So huge news there. 50 years of dividend growth out of these guys. So it's nice that we're seeing dividend growth like 10%. That is stellar. Year-to-date performance is up 7.53%. So not only do we have growth from the stock, we have growth in the dividend. Just absolutely the best case scenario. That's what you expect to see. And the market's like brutal right now. So if we see some sort of big market, like bull market kind of action going on with the news, like Pepsi could spike even further, which would be insane. I'm not a wealth manager, credit counselor, or financial advisor. I'm just a guy in a triangle-shaped room ranting about stocks. Moving on. Procter & Gamble Company. All right, so we are at $480.09 of Procter & Gamble. We are now over 3 full shares, so we have 3.09 shares. And the price of this has kind of plateaued, okay? So we're no longer like skyrocketing alongside Pepsi, but we are still very well up on this. The dividend is at 2.41%. We are getting paid out a dividend from Procter & Gamble this month, so that's pretty exciting. Again, this is another one of those stocks that has increased their dividend for the past 66 years. Definitely a dividend king if you guys are into all that stuff and that jargon. But yeah, they've increased their dividend payout every year for the past 60 years without missing a beat. And the year-to-date performance, it is up 2.95%. So, it's up. That's a good thing. So if the stock is up, that's great. JEPI. So JP Morgan Equity Premium Income ETF. This is designed to be a monthly payer. So this is kind of just a dividend that pays you every month. Basically JEPQ's older brother. But JEPI is, kind of stable. It's just kind of doing its thing, which is great. I'll take JEPI at a stable, performance all day long. We have $461.19. That's 8.43 shares of JEPI. The dividend's at 9.31%, which is stellar. It pays us out monthly. It's 2 years old, and it has 2 years of dividend growth. Year-to-date performance, it's flat, so we're at 0.42% increase. I guess that's better than a decrease. But, that's where we're at with that. BlackRock. All right, so BlackRock and beneath are just kind of a different story than everything we've talked about. So BlackRock, we're at $418.97. That's 0.65 shares. The price of the share is at $643.14. This continues to bounce up and down, but we're hovering at this like 630 to 660, 670 price range. It is what it is. What I like seeing is the 3.1% dividend yield. That's really what I'm in it for. BlackRock, I believe in them as a company. They have been around for a while, and they are extraordinarily strong. So if I can buy into their dividend and do it cheaply, I like it. But 13 years of growth in the dividend there. But the stock is down 9.05% year to date. So, with a number like that, it's definitely going to be towards the bottom for sure. But it's not the bottom. Right beneath that, we have AT&T. Okay, we have $411.47. Now that's 24.03 shares at 17.12. The dividend yield on this is pretty high, right? So the price has come down a lot. The dividend yield now is at 6.48%, which is great to look at. But you'll see that they're at 0 years of dividend growth. They did cut the dividend about a year ago. And something that is very interesting is they're only down 6.95% on the year. All right. This is where dollar cost averaging comes in, guys. Excuse me. But dollar cost averaging, buying a stock every day, right? Even though BlackRock is down more year to date, we are doing better with BlackRock than we are with AT&T. And the reason why is because, as I said, BlackRock is kind of doing the up and down, up and down. So we're buying it high and we're buying it low. Then we buy it high, then we buy it low. What AT&T did was a little bit different. So AT&T kind of crept up and up, and it just stayed at like, that $19 range, and then it dropped like to 17. So we're still down at 17. We've basically been buying it for way more expensive. Now, fortunately, we're buying it at $17. So, we're buying it cheap. That should even out, and hopefully we should see some resurgence in the price of AT&T, because that will look excellent, but not as excellent if we see that resurgence in the price of BlackRock. I mean, yeah, just look at these numbers. It's crazy. Anywho, MPW, bringing up the rear of the stuff we're buying all the time. Medical Properties Trust, we're at $395.26. Now, personally, I thought that this would be the day that we would break $400 with our $5 investment. And then the stock dropped 0.46%. And, we have 46.12 shares of this thing now. We've got quite a few shares, for buying $5 of it at a time. But, dropped just enough to keep us under $400. Hopefully tomorrow we'll be at $400 of MPW, but man, this thing is really dragging us down when we look at the total performance of the portfolio. But it is what it is. We're buying it cheap. Our cost basis has gotten way lower, so that's good. It's at $8.57 per share, or $8.57 per share. Our forward dividend yield, though, because it's low, is at 13.47%, and they are paying that dividend in July. Plus, guys, 10 years of consecutive dividend growth leads me to believe they're going to do whatever it takes to keep that up. So even though they're 22.71% down year to date, dang, that's a ridiculous number. But in reality, we're only like $15 worse than our AT&T position, which is down 7% or 6.95. So, is it really significantly that much worse? I don't think so. I mean, we're one good day away from MPW and AT&T switching. So we're getting back to reality with MPW. I mean, if we're within a day, like if this jumped 30 cents and AT&T didn't move, we'd way overtake AT&T. So I like it. I think we're in a good spot. I shouldn't say way over, but we'd be like right about there. Maybe 40 cents, but whatever. So yeah, even though the year-to-date performance is really bad, our dollar cost averaging strategy has kept MPW in a one-day market swing away from, almost I'm going to say BlackRock too, but whatever. So we have this other one, Tesla, Yield Max Tesla Option Income Strategy ETF. This is a completely ridiculous fund. I don't know anything. Well, I shouldn't say I don't know anything. I know a lot about it now. But I don't know enough of its performance to make any sort of recommendation to anyone on this stock. I just saw it on the internet a lot and I bought it. I ran some calculations on this. I'm going to do a video on it and how ridiculous this would be if it keeps up the level of performance that it's at. But we have $26.90. That's 2 shares that each valued $13.45. But this forward dividend yield is 39.48%. It's absolutely ridiculous, heinous, in fact. It's a brand new fund doing ridiculous things. their payout date, we're going to get a payout here too. Year-to-date performance, it's down 8.52%. We're even on it. Yeah, just craziness. So the last thing on here, there is a JetQ $46 call option. It shows that I have two shares of that valued at $10. I actually sold these today for $20 each, or maybe it was $15 each. Either way, I bought them for $5 and we sold them for 20 something, or 20, I think. But yeah, so we bought those, we sold them, made some money on that. So our current USD cash balance looks pretty good. That's available for trade. Now, I did buy an option on AT&T, which we're not going to see here yet. But I spent $20 on a call option from AT&T. Bought that. It's currently worth $23. If we look at today's chart for AT&T, I bought it when AT&T dipped under $17. I just don't think that people are negative enough on AT&T for it to drop below $17. You can see that in the short interest. It's only 1.21%. Not a lot of people shorting AT&T right now because the stock already did this, right? That's a pretty huge drop. It dipped below $17 for a couple days, and now it's been like retracing back up. So I think that AT&T, if it's under $16, is a great buy. That's for me at least. And again, I'm not a wealth manager, credit counselor, financial advisor, and I'm just a guy. But just seems like there's some resistance there, so I'm cautiously optimistic. I bought some options. It's a $17 strike price, so anything over $17 I keep. I thought it was pretty low risk. That's like a put my money where my mouth is kind of move. But yeah, so that is basically what's going on with the portfolio. All right, guys. So the next thing we want to take a look at is my dividend yield calculator. This is probably one of the most primitive calculators online, and you can see the forward dividend yield here. However, we're going to kind of dive into where these come from. So MPW, which is my smallest holding of my stocks or ETFs, aside from Tesla, which I don't really want to count anyway, but that's okay. So MPW, $395 at 13.47% means that every year at its current dividend rate, I'm earning $53.24. So $53 coming from my MPW position. AT&T, again, the price is down. The dividend looks pretty good right now, though. So we're earning $26.66 per year. Now, JetQ, this is a heavy hitter position for us as a dividend payer, and you'll see why I love it so much in the portfolio. So our $790.11 yields us 12.78%, and that is $100.98 per year. Guys, $100 a year of dividends from one holding really is starting to feel like something. Right? Obviously, this feels like something. This is pretty good, but $100 a year is great. Realty Income Corporation, that's $887.41 at 4.86. It gives us $43.13. Guys, that is again really good. Like this is it. These are real numbers here. SCHD is getting us 28.88. JEPI, which again, just a killer monthly dividend payer, is $42.94. Tesla, look at this. And again, this is why I threw it in the portfolio, just to look at it, because it's ridiculous. We have $26.90 invested at a 3.948 dividend yield. It's $10.62. And let's just put this in perspective, guys. It's within $1 of Procter & Gamble, which we've invested $480 into. So if I put $480 into Procter & Gamble, and that's going to earn me 11.57, I put $26.90, and it's going to earn me $10.62. That is mind-blowing, guys. 100% absolutely and completely mind-blowing. I might even put more money into this just so that it can be more ridiculous. Like, if I were to do, we've got like 160 in the account. So let's say we made this position like 140, right? What does that do? That's $55. Oh my god, it's ridiculous. Anyway, let's put that back to where it is. So Procter and Gamble, $480 is yielding us $11.57. It's almost like insulting now after looking at this ridiculous Tesla thing. It's or like MPW, but whatever. Pepsi, right? So we're earning $12.76 from Pepsi. BlackRock, we are earning $12.99. So you can see our total for dividend yield is $343.76. Our current forward dividend for the portfolio is 6.58%. All right, so that number is feeling pretty good. Obviously, it's not our dividends on cost. Our dividends on cost are going to be slightly higher just because, one, we have portfolio growth, which means we're not negative. But two, we are earning dividends on our dividends at this point, and we'll continue to stack dividends on dividend payouts. So pretty cool to see that dividend snowball really coming into effect, and our portfolio is growing way faster than anticipated, which is awesome. We are not halfway through the year yet, and I think that is something that needs to be stressed. So the goal is to put $13,000 into this portfolio as principal, but we are currently earning quite a bit of dividends in the meantime, as well as seeing some unprecedented growth from some of our more safety picks. I wasn't necessarily anticipating Pepsi, for instance, to be up almost 10%. I don't think anyone was predicting that, but it's doing what it's doing, and I'm okay with it. So, as I've said from the beginning of the channel, these are all high dividend paying stocks with pretty good reliability in paying them. So I almost wish that they were going down. That's why I'm not too upset to see SCHD coming down a little bit. We're seeing Realty Income Corporation coming down a little bit. I am perfectly fine with that because they're companies or funds that I believe in. As I said earlier in the video, our position on MPW is like within a day of trading's shot of AT&T and BlackRock. So I don't know if I can necessarily throw it in like the whimsical chaos stock category anymore. I would put it in the this is a massive company that's having a bad year category. And that's a way better place, I think. It's a lot safer place, I think. But it looks like their management's doing a great job of selling off stuff and reallocating that money to different projects or paying the dividends or whatever. So we'll see if that continues. I hope it will, and I believe that it should. But obviously, I don't work for the company. I just own a chunk. And so do you if you own NPW. But anywho, that's pretty much where we're at. As far as health stuff, I feel great. Hopefully you can see it in my face a little bit. But I've been going to the gym. Keto's working awesome. I'm eating really weird stuff. I mean, the other day I had a hot dog wrapped in bacon, wrapped in turkey, and in a like cheese bun that I made out of cheese. Like weird stuff. Today for dinner I had some arugula with ranch dressing, blocks of Monterey Jack, and a hot dog cut up in it because I ran out of meals. I have been doing Factor 75. It's been pretty good. I'm not sponsored. It just is what it is. I have done it before. I feel like they've improved some of the recipes, which is nice. So much cauliflower mash, though. Like, stop it with the cauliflower mash. It doesn't taste good. It doesn't feel like mashed potatoes. I don't know why people pretend that cauliflower mash is a thing. Obviously, it is a thing. It's just not my thing. I don't like it. But aside from that, like chicken and stuff's really good. The killer pork tenderloin thing the other day, it was really good. So if anyone does Factor 75, get the pork tenderloin. Really delicious. The salmon's pretty good too. But yeah, so we'll see. Anywho, that's been pretty awesome. If anyone's into the collectible stuff, I picked up some pretty sweet Pokemon cards over the past couple days. Or I shouldn't say couple days, but like over the past week. Got a couple cool slabs. I am going to meet up with a shop to see if I can sell off some of my bulk. And I have a lot of like rares that I don't necessarily like want. Like I've got random Pokemon cards all over my desk. Like I've got this just sitting on my desk. Like I don't want this card. What am I going to do with that card? Although it's actually a pretty good card. But anyway, that's a different thing. So yeah, I'm going to try to offload some of those and see what we can do there. The Pokemon cards the collection is getting pretty sweet. I'll do a video about some of those in a little bit, but yeah, it's kind of fun. Aside from that, just trying to do more fun stuff. Just try to spend time with family a little bit, and yeah, just enjoying life and being busy with doing stuff, and yeah. So boxing's going well. We hit the gym, losing weight. Again, getting a little more. You can see like my shoulders and stuff now. I have like arms. Aside from that, I wish everybody happiness, health, and wealth. And as always, roll the outro.